afternoon, ladies and gentlemen, and welcome back. I'm your friendly neighborhood PM here to give you your top 3 market points of the week. Now, in honor of how the markets are doing this week, I went ahead and wore red. So without further ado, let's dive into your top 3 points and recap what's been going on. At point number 3, it's the broad tech sell-off that we're seeing this week. So, like I said, tech is really leading this sell-off over this past week or so, in particular today. On the other side of the coin, we've seen quite the rally, a lot of it being led by tech over these last couple of years. Now, in addition to AI innovation, there has been the ongoing prospect of rate cuts later on in the year, and that's really helped spur this rally coming into 2024. Now, this sell-off does feel a little bit like it's profit-taking, a little bit of trimming of positions, but as we continue to say, mega caps have been hit, and the one really leading the way this week was Salesforce after they offered a less than enthusiastic sales forecast following their earnings call yesterday, and it caused the stock to fall almost 20%. At point number 2, it was real personal spending coming in softer than expected and declining 0.1% month over month. Now, what this tells us is that spending dragged a little bit as a result of ongoing softer service spending as well as moderating wage growth. And really what this continues to tell us, in addition to the retail sales data that we saw over the prior month, is that maybe the consumer is starting to get a little bit more tired and they're being a little bit more selective with where they're spending their money right now. So companies might want to be prepared that the consumer will not be splurging nearly like they were last year. Finally, at point number 1, it was core PCE coming in relatively in line with expectations and declining slightly month over month. Now, this is an optimistic sign because this is the Fed's primary inflationary gauge. It's their favorite one to check. And any moderation in that gauge does kind of bolster their argument for future rate cuts. You take that in combination with moderating retail sales, as well as some disinflation that we saw last month, and they do continue to kind of bolster their argument for potential rate cuts in the latter half of the year. Now, nobody wants to see, a weakening consumer or lagging retail spending, but in the same vein, nobody wants to deal with high inflationary prices. So we're going to keep you updated on the inflationary decision-making of the Fed, as always, every single week. Now, those are our top 3 points of the week. What are we looking to for next week? Well, next week it's going to be primarily labor market data. So we're talking non-farm payrolls, unemployment rate, participation rate. We're going to have the whole suite of it next week as well, because that is a primary gauge of what's driving inflation as well, in addition to wage growth. Now, that pretty much does it for this week's video. As always, if you have additional questions, please reach out to your financial advisor or dig into the written weekend review. But as always, we hope these get you prepared for your weekend. You can go enjoy it now. We'll see you at the same time, same place next week. Thanks. Bye.